We've had a solid first half and are confident of delivering our targets for the current financial year, ending in January 2023. There's been strong progress in delivering on our growth strategy, with energy and water efficiency clearly at the forefront of our clients' priorities. The current macroeconomic environment, while it's difficult for everyone, we are cautiously optimistic that it does create opportunities for the group. The technology solutions we provide are increasingly important in reducing carbon emissions, cutting energy bills, and reducing exposure to the volatile fossil fuel markets. Having successfully raised funds at IPO last November, we've strengthened our position in our target sectors. And in addition, as promised, we've pushed on in agri-tech with our first major contract win with the state of Uttarakhand in India.
Our half-year trading was robust and demonstrated the solid performance of the group amidst a challenging economic environment. Revenue for the half increased by 92% to 24.2 million, demonstrating the group's ability to convert our new business pipeline into contract wins and realised revenue. This has seen the average contract size increase from 2.25 million in H1 FY22 to 3.5 million in H1 FY23. As we expected and outlined at IPO, alongside this growth in contract size, there has also been a reduction in gross margin compared to previous periods. Through the contract wins secured in the second half of FY22, adjusted EBITDA increased to 4 million. As we have noted previously, due to the nature of our customers and their procurement calendars, our contract delivery and revenues are weighted to the second half of our financial year. The phasing of contract delivery and the full impact of the larger contracts is expected to positively benefit earnings in the second half of this financial year.
We have a clearly defined strategy to build strong long-term growth, both organically and inorganically. Despite the challenges in the current economic environment, Eneraqua remains on course to deliver on its substantial growth targets with strong performances from both the energy and water sectors in the financial year to date. In energy, the half saw major contract wins with growing demand for our air and ground source heat pump-based systems. This was further highlighted by the announcement of our post-period contract wins and contract extensions with new and existing social housing and private sector clients to provide heat pump-based solutions over the coming 3-year period. The decision of current clients to extend their existing contracts to cover additional sites is a great reflection of the quality of service and value for money that our team delivers. In our water division, alongside our core programs to improve domestic and commercial buildings, we also completed our planned expansion into the agri-tech sector, with the first contract win in India, delivering our climate-smart irrigation program for the state of Uttarakhand. Following the success of this project, we're now in discussion with other states in India who are also interested in what the solution offers for their farmers. Water also saw the award of contracts with 2 English local authorities to deliver net water neutrality programs. By using control Flow HL2024 in existing homes in their area, the project showed it was possible to save enough water to meet the needs of the new homes planned for that area, thereby avoiding placing any additional demand on local water resources. Following the success of the pilot programs, we're now in discussion with other local authorities and developers that face this same issue. Our research and development teams remain focused on developing the next generation of new and innovative solutions to reduce carbon emissions and water consumption, with new patent applications submitted during the half year. We are on track to launch our new Mitesh product later this year that allows the control flow product to be more easily installed alongside the water meter. And finally, following the 2 acquisitions last year, we were delighted to complete at the end of H1 the acquisition of Mathewson, an established provider of underfloor heating solutions for the health and commercial sectors. This acquisition extends our reach into the healthcare sector and deepens our offering in the commercial sector by broadening the services that we can offer clients. The company continues to make great strides forward. We've got momentum in our order book from new clients and also existing partners that want to extend their working relationships with us. We've rolled out new products and completed a further business acquisition that opens new doors. The group remains on target and expects to benefit from the traditional H2 weighting of our client procurement calendars. With a strong pipeline of opportunities for the current year and beyond, we have an order book that provides full revenue cover for the group's financial year Jan 23 revenue target. For financial year Jan 24, given the performance to date, the original revenue target has been increased by 14% to £80.1 million. Our order book cover for this increased target currently sits at 72%. This success is down to the hard work and quality of our team. Their dedication, focus, and commitment to delivering high-quality outcomes underpins and generates the strong relationships that we form with our clients. Our clear strategy, performance to date, and strong order book leave the group feeling confident for the future and focused on the next stage of its development.